Dispose of. What does that mean in practice? Can I use it to, say, pay my taxes? Or maybe donate it to my favorite charity and get a tax receipt?
No, the sources are very strict here. You absolutely cannot benefit from this money in any way. It explicitly says not to use it for taxes.
Why not taxes?
The principle explained is that prohibited gain cannot become legitimate property for you. Using it to pay taxes would be a direct financial benefit, saving your own legitimate money. It can't be used for personal gain or even to fulfill personal obligations.
So no personal benefit whatsoever. Where does it have to go then?
It must be given away, specifically to the poor, the needy, or used for general welfare projects like public benefit initiatives.
And it's not considered regular charity.
Correct. The sources clarify this isn't like a voluntary charitable donation where you might expect a reward in a religious sense. It's presented as a mandatory act of purification, cleaning your wealth from a forbidden element.
Mandatory cleaning, not optional giving. Got it.
And the timing, again, locked to owning the share at the period end, like March 31st, June 30th, etc.
Yes. The sources emphasize purification is triggered by ownership at the financial period's closing date, regardless of whether you actually received a dividend payment or not. It's about owning the claim on the company's assets and earnings at that specific point.
Okay, that covers the 5 main rules for assessing the company and handling its income. But you mentioned the sources also cover something else. Prohibited investment methods.
That's right. EZS-NUA. This adds another crucial layer.
So even if the company's shares pass all those tests we just discussed, the way you trade them still matters.
Precisely. The sources outline that certain methods of trading or investing in shares are themselves prohibited under Sharia, even if the underlying share is deemed compliant.
Okay, what kind of methods are we talking about? What examples did the sources give? The list includes things like trading using contracts that are incompatible with Sharia principles. They specifically mention certain financial derivatives like futures, options, and swaps, especially those based on indices.
Right. Derivatives often involve speculation or uncertainty. That's problematic. What else?
Short selling is listed as prohibited. Buying shares on margin, meaning using a loan that involves interest to buy the shares.
Margin trading, yeah, that makes sense given the rules on interest.
Also, renting out your shares to someone else for a fee, pledging shares as collateral or security for a loan, trading shares using salon contracts. These are specific forward contracts with strict Sharia conditions that might not apply easily to shares. And finally, dealing in preferred shares or enjoyment shares.
Preferred shares often have features that resemble debt or guarantee returns, which can be an issue. So it's a whole extra set of rules just for the act of trading.
It really emphasizes that compliance isn't just about picking the right stock, it's also about how you interact with the market.
Definitely adds complexity.